plenty of news and market moves for traders and investors to sink their teeth in today. Certainly it's had a little bit of everything in the session. Certainly all eyes back on Australian politics, where the votes are being recounted, or the counting, should I say, is underway again. We've got about 70% of the votes fully in now. The postal votes are coming in thick and fast. It does look like we're going to see a hung parliament, and everyone's focus is on what S&P are going to say further down the line with regards to their AAA rated status for the credit rating. I probably sit in the camp that further down the line it's inevitable that we are going to lose that, given the comments we saw from S&P recently. But it's not for traders to really worry about right here, right now. On the economic data front, we've seen the trade balance figures for Australia coming out. We saw it widening to 2.2 billion. That was worse than what the market was pricing in. That could be a bit of a headwind for future growth readings coming through, and also the retail sales numbers at 0.2% were worse than the market was looking for at 0.4%. So again, another Australian dollar headwind, and we did see it dropping down into that low 75 handle. What we've also seen today is the RBA meeting. Now, no one was really expecting rates to be cut today. It was really more a platform and an understanding about how the RBA was seeing the world, given all the events we've been seeing of late. In fact, the market was pricing a 5% probability of the RBA cutting today. So they obviously haven't done that. What we've seen is a view that they need more information about what's happening in the UK referendum, what that means for UK assets and also global financial conditions. So I think a lot of people are watching not just the politics in the UK, but also what the Bank of England do and also the financial market reaction there. And that's something the RBA are very much watching as well. The other situation is they want more information to make the assessment on growth and inflation as well domestically, and then they could alter policy. So what we have now is a situation where the August meeting for the RBA is very much live. The market's got that at a 45% probability they ease. I think most economists would be expecting them to ease, but the more information is now very much centred on that 27th of July CPI print, that Q2 print. We're expecting both headline and trim mean to be very low, continue to be low, and that should give them scope, therefore, to ease policy going forward. But the RBA want to see that inflation read. That will put the August meeting very much into a live meeting, and there's going to be a lot of volatility around the Australian dollar there. We haven't seen a reaction in markets on the back of this RBA maintaining policy where it is. The market is down about 1% or so. The Japanese market's under a bit of pressure as well. We've got China up on the day, but certainly equities were already falling off before what we saw from the RBA. No real policy change there as well. So a lot for traders to digest today.